Hi guys, this is Vishal and welcome to Star Trading Concepts. And we are going to talk about. I've been sharing a lot of videos in the last few days on Star Trading Concept. The one was RSI range shift yesterday, and there's RSI basic 40-60, the conventional unconventional concept. Now let me just share some more about the chart. Let me just share it, right? So let's put the chart on. Yes. So in this case, we are going to talk about is, and if, yeah, I can see so many of you are live here. Okay, great guys. So we had a good, nice sideways weekend on the markets, but at the same time, we are ready for a good move next week, maybe, because it's an part of kind of last time when I shared something called as anniversary move, and 26th, 27th October was one anniversary. Similarly, we have next week, 21st, 22nd January as another anniversary date for markets, which is 2008 crash started on 21st January. And also, one thing is this, I think it's a new moon thing. So planetary action, anniversary dates, and all coming together in the next week. And of course, the budget is on the card. So be ready, so fasten your seat belts and get ready for some action. So RSI in, I hope you guys can and hear me properly, right? Say I'm okay. I can hear you and can see the screen if you can. All right. Yes. Okay. So let's talk about yesterday when I asked you about the range shift concept. Okay. So let's go to let's or this is a daily chart. So if you notice that what I shared yesterday in the screen. Thank you so much. All right, so let's go to the chart. The if I think if you guys are watching this for the first time, maybe you need to connect to the video yesterday and day before where I explained conventional, unconventional, and then the range shift part. Today, I'm going to show you an example of range shift. What we can look at here. So if you look at this, is a clear downtrend which goes below 40, and then if you notice, that is where it takes support on 40. So that says not bearish. So that's where I would love to cover my shorts. And of course, from if I cover my shorts, the next target would be 60, which it did. Now, the question is whether if it crosses 60, then it goes into the bullish zone. So from a bearish zone, this is the point where it turned into a sideways zone. And it remained in sideways for almost like this period. And then again went bearish. So it didn't turn bullish, but this much was sideways. So now I know when to be out and maybe get back into it. And now in the last few days, we see another range shift. So that's exactly how the range moves from, this was a bullish range move, or we can say from bearish to sideways, right? So let's look at, say, a couple of more charts. Let's change the chart to weekly and see if there is interesting. Yes. Now on a weekly chart, let's say if we, by the way, if you want to learn more about this thing, what I'm talking, go to week on my do it. Haven't, we just type.com in the comment section while I'm teaching this. So here, if you see this below the 40 and now range shift. So now at this point, it says I'm not going down. Now, it doesn't mean I'm going up, but it says not going down. That means one thing is sure, that I need to cover my shorts. And I can even do something called as sell puts, which I teach exclusive options mastery, where I teach you how to trade options using only RSI, whether it's on daily or weekly or even in intraday chart. So this is range shift. It says something about the market. And you can, from a price pattern, we see there's a kind of a double bottom or a support, which is remember the 7-step analysis: the price, pattern, volume, momentum, volatility, time and sentiment, and then sector and everything. So it's like goes beyond 7, 8 steps. So first step is price at support. Second step is look at patterns. Maybe you have bullish pattern here and you have some indecisive patterns here. Maybe we can look at volume also. Now, see this volume, which is, sorry, this line is not printed. This volume, which you can see, is a high volume and there's a small body. Now, if you have a high volume and a small body, what does it mean? It simply means there is some kind of accumulation, because if it was a selling volume, it would have been a big black, like in this case, right? So that means somebody has bought it. So volume confirm price, pattern, volume, three things in favor. And the fourth one is momentum, which is also showing range shift, right? So this is how now I know that there is a higher probability of this stock going up than going down. And then this is a weekly chart. So then I go into my daily chart and then look for a range shift here also. And then I can go into an hourly chart and look for a breakout above 60 on hourly chart, or maybe a 15-minute chart, to trade this stock from a long point of view. See, this is how we integrate all the tools and all the time frames and put together. And that's what basically started in concept is about what we teach and started a program. So if you want to attend this free seminar, which we call as malkanstarcall.com, make sure you be part of this thing. Right now, actually, I am traveling the audio. Let me fix the thing, and let me just put Malkan starcall.com. Maybe you can show this malkanstarcall.com and register for this free webinar coming up next week. And the range shift topic will continue maybe tomorrow. And I wish you good luck, good trading, and a good weekend. Be ready for some action in the next few days, ahead of the event, ahead of the planet, ahead of the anniversary date. And I'll see you in my next video. Make sure if you like this video, make sure you share this video with your friends and family. And I'll see you in my next video. Register for malkanstarcall.com. Good luck, good trading. Thank you so much.